Good morning. Welcome to today's video. Today it's a little early, as you see, so the sun is not up till now, but I guess in 5 minutes we will see the sun behind me. So let's get started. What is going on in the markets? So a lot of people are very nervous because of the rate cuts. Some people say when we get the rate cuts from the Fed in actually tomorrow on Wednesday, some people think that this will be very negative for the markets. Well, I have done some research and digged into some data, and this could be true that rate cuts have been negative sometimes in the past, but just in the case that they have cut the rates because of a recession, or they have actually cut 0.5 basis point, not 25. Because if they cut too much too fast, the market estimates, or the market thinks that we have a problem because the Fed has to react very heavily. So if we just get a regular 25 basis point cut on Wednesday, this should be positive for the market. And on average, markets go up after a rate cut 20% in the next 12 months. Meaning, if they will cut 25 basis points as they have estimated, or as the chances are highest at the moment, according to the Fed Watch website, this should be very positive for markets. This is one part of the game that we're playing at the moment. Also, we see global liquidity rising. If you don't know what global liquidity is, it's also called global M2. And it's basically all the money that gets into the economy all over the world. Meaning, as soon governments start to print money, this could be the United States, could be Europe, could be China, could be any country in the world. As soon they start to print money, global M2 will rise. What this means is that there's more money in the economy, more money for the markets, and usually risk-on assets like the stock markets, but also especially Bitcoin, crypto markets should rise if there's more global M2. So this will be very positive. Also, the other side is going back to the rate cuts of the Fed. When the Fed decreases, so if interest rates get pushed down, it will also be easier for regular people again to take out a loan and do all kind of other stuffs. So this could also benefit the market for the retailers, because then they have a little more money. So we have now rate cuts, global M2, we have the Genius Bill, we have other legislations that will make it easier, much easier for companies and for stablecoins to come in. We see an explosion now of stablecoin issuers. And if you have seen that, there was a warning of, I think it was an advisor to Putin, a Russian guy, who did an interview saying that they are worried about that the US will now just convert their debt into crypto, meaning all the liabilities, all the problems they have in the economy, they will now just push into digital currencies. Meaning, if you know something about stablecoins in the US, if you are a stablecoin issuer, you need to back your stablecoins by treasuries. So if you issue all the time, you issue stablecoins, you need to buy US treasuries. This helps actually to minimize the minus the US has got. Already, I think US Tether is the 5th biggest buyer of treasuries after or before Germany, I don't know, so even before countries. So they're playing this game. And also what they do with the stablecoins, they're actually ramping up the usage of the US dollar. So some people talk about that the dollar as world reserve currency has got not much time left. But in my eyes, it is not this way. With the stablecoins, they will be able to at least delay it for 5 more years or something like that. There's a very nice view to the sea. So let me show you. There's no sun now, but the sun will rise very soon. And you have the sea down there. So it's actually a very clever strategy of the US now to issue all these stable coins. And what does this mean for us as investors? It basically means that, in my eyes, there's so many bullish factors that I think we will see a quite heavy run up till the end of the year, or maybe continuing into Q1 or even longer. The regular 4-year cycles, I'm not sure if they hold still. Why do I believe this? Because you need to always have a look who are the buyers, what are the volumes in the markets, who is playing the markets, and how much money you need to move the markets. Meaning, when Bitcoin was quite early, there was not much money in the markets. All these big institutional investors have not even been here the last cycle. So who depended or who moved the market? It was retail. It was the regular person, the regular investors from the street being able to move markets. So if you put in the very early days, of course, the smaller the asset is, the smaller the amount is needed. A very small amount is needed to move the market. So in the beginning of Bitcoin, even $100 would have moved the price quite a lot. Now, at the stage that we are at the moment, you need about 1 billion to move the Bitcoin price about 2.5 to 3%. So we are at this stage now. This shows you that it is not so easy anymore for retail investors. Even if loads and loads of retail investors come in, they don't have billions, right? They don't have millions. They probably invest, I don't know what the average is, but I don't think that the average is more than $5,000. So if they come in and they want to move, or they estimate or they think they can move the Bitcoin price with their investment, this is of course not realistic. This is why we will see, or we have to see, if the cycle is basically staying the same with the 4 years. It could extend. So this is very likely to happen. I also don't think that we will see an 80% drop in the next bear market. We will see a drop, but probably not 80%. What could happen is that we see all these investment houses, all the ETF holders, when you know that an ETF, a lot of people say BlackRock bought all these Bitcoin ETFs and so on. It is basically BlackRock is buying it, but BlackRock is just buying it for their investors, right? So the individual investors are investing with BlackRock, and it's not really money that BlackRock controls. Well, to this point, we don't actually know. We get into the discussion about paper Bitcoin again on this point, because as we can't see BlackRock's wallet, we can see Bitwise wallet because we have the address, the Bitcoin address of Bitwise's wallet, meaning that we can see that they're actually acquiring Bitcoin. So we can see the flows for IBIT, which is the BlackRock ETF. We cannot see this. So it is theoretically possible that they are not buying all the Bitcoin physically, so to say, as they should buy. What gives me this idea? Well, if you look at the gold and silver market, there have been a lot of cases where some of these companies have promised the holders to store physical gold or silver in a vault, and even charged the clients for storing the gold in the vault. But the gold was never there. And this would be very possible for the case of Bitcoin. But all this story I wanted to tell you to get to the point of the risk factor in the next cycle. If this kind of people that have bought the ETF, or if BlackRock wants to indicate some fear or some bigger investment house, then if Bitcoin goes down quite a lot, don't forget, for a regular stock investor, a drop of even 10% or 15 or 20% is enormous. Well, we have seen Nvidia, Tesla, and so on in the latest months dropping quite heavily, quite unusual for the stock market, but this is probably too much for regular investors. So it could be that then they start to dump their ETFs, and then billions and billions will flow back into Bitcoin. And this you can just calculate. If 10 billion is flowing back, then this should basically mean that the price is going down quite heavily, right? So maybe then Sailor comes in and buys this asset, or other entities come in. But also they have shareholders, so they have to make sure that they are, making their shareholders and the board happy. So this could be a problem. Apart from that, I see loads and loads of positive, almost just positive indicators for the market development in the next weeks and months. It is always very difficult to decide, because especially if you are in a position, you sometimes start to worry and think, did I make the right decision? And then the thing is, you have to combine your knowledge. You have to, first of all, know what asset you want to buy. But then also you need the right timing. So even if you know the best asset, like I told you yesterday, we talked about the 4 assets I see very positively. It was Hyperliquid, it was Pump.Fun, it was Pingo, and it was Tau, Bitensor. This asset, if you went into this asset some days ago, you are quite heavily up on Tau. No, on Tau you are almost break even at the moment. On Pump.Fun, you're quite heavily up. On Pengo, you are quite well down. And what was the other one? On Hyperliquid, you are a little down. So, and then you have to stomach this risk, or if you actually leverage trading, you need to, it's very, very difficult to set up this kind of trades, because where do you put the stop limit with that volatile asset? BitTensor is not that volatile. Hyperliquid can be very volatile, but especially these meme-related things are very, very volatile. Also, yesterday I tried to stream on pump.fun. So the first time, I didn't get rich, unfortunately, but I mean, I think I had 3 watches and I had 1 comment telling me it's boring, but it was before I actually started the stream because I had some issues setting up the stream. I would strongly recommend if you are doing any kind of videos or lives or streaming it. So I would actually stream it live now, but the problem is that I'm here in the mountains, as you see, and my internet is not that stable to do that. So, but what I do is I will just, when I get back, I will download it from my phone. And then basically I will upload it to YouTube, where you're probably watching it. And then I will basically stream it to pump.fun. You can use streaming software like OBC, I think it's called. I just connect it and then stream it up. Yeah, so this is the combination you need, right? So if you pick an asset and you don't also consider the timing, this is why we talk a lot about the fear and greed index and so on, because this is a very good timing indicator for me. But this is more a long-term indicator. In my opinion, the shorter the time frame gets, the more difficult it is to time the market. Selecting the assets, I don't think it is too complicated. You need to spend a lot of time in the markets. But the problem, especially in crypto, is that almost every asset is reliant on, for example, Bitcoin, because you see it quite well also with these 4 assets I told you. As soon Bitcoin goes down like 1%, also these assets start to go down. Or they are related in a different way, like it's the narrative. At the moment, the narrative is a little falling asleep again. Not with pump.fun, because pump.fun managed now after this crazy coin establishing hype, so everybody can make his own meme coin. Now they established the streaming, right? So how it works, you go there, you actually create a coin, and basically on the page of this coin you can stream, and in the stream the people can buy your coin. So this is how the thing works, and this brings loads and loads of regular streamer and everybody to pump.fun. They will spend a little money there because they are promoting their own coin, and if they have an audience they will try to buy their coin. And what it is doing, actually, it is taking out the middleman, meaning that now the fans of the influencer can come to this platform with the influencer. They can directly buy his coin, and they can profit from the coin as well, because the more people get in, the more people buy the coin, the higher the price gets of the coin. So this is a very interesting narrative. Even if you don't like I'm also not a fan of all these memes and stuff like that. So there are some funny ones, but in general, I don't like it. But if you see it in a way like a big influencer is coming to the platform, like, I don't know, your favorite crypto channel or whatever, right? Then you could buy in very early, and then let's imagine they have 1 or 3 or 5 million followers, and slowly they're promoting it, and they move to pump.fun because there's no middleman and they can get the money directly. So just imagine these millions of people come in and start to buy their coin. If you have been very early, there's a very good chance for you to actually make money. Back to the point of timing. Like I said, long term, I find it much easier to time, because if you are a long-term investor, you can use metrics like just simply the fear and greed index you could use. So make it a rule that you just buy if there is extreme fear in the market, and just sell if there is extreme greed in the market. You don't need anything else. But Now that we are so advanced already in the cycle, but you still want to invest because you think now it is really going to explode in the next month, and you maybe still sitting on the sidelines, you can't really use the fear and greed index, because the fear and greed index is at the moment always around, I don't know, 45 to 55, something like that. So in a neutral zone, basically, in neutral, a little almost in greed. So in this case, it's very hard to use it as indication. So in this scenario, what can you do? You really need to understand the narrative, and you need to understand the project. What is the project doing? How much chance does it have to succeed? Is it following the narrative? Now, if we take my analysis, like we have been talking about M2, we've been talking about the Fed, we've been talking about the stable coins that will bring in loads of liquidity also into the crypto market, rate cuts and so on. If we believe this is true, what kind of picture does it paint for us? Show you the sunrise again. Unfortunately, it's behind the tree, so we can't really see everything. So if we say, okay, this will become true and this will actually let the market skyrocket. If you believe this, then you can take, or you can try to invest in projects that will strongly benefit from, let's say, the liquidity, or from people going in and taking more risk and so on. And what kind of projects are these? Basically, I'm talking about almost the same projects all the time, right? But because of this, I decided to go for these projects. And this would be ENA, so ETINA, because when the market gets hot, this coin will get hot. And we talked about it yesterday. They are now included or used on Binance as stablecoin. So this will get very hot. Hyperliquid will get very hot because it's the same but decentralized. So it's the most popular exchange that people actually trust. Also, a lot of whales trade on it. And they're giving back a lot of the fees, most of the fees, to the users. So this is good. The more market, the more money people make, the more money they have, the more risk on they go. Meaning, even if this is Bitcoin investor, Ethereum investor, Solana, or more conservative investor, they will at a certain point flock out and go into some trying to make a 100,000x meme coin trade, right? And what will they most likely use for that? They will go and use pump.fun. So this is also very positive for that. Why Tau? Because for Tau, we will see an AI narrative running again. It's possible that other AI narratives will run, but I told you yesterday that I think Tau is the most stable coin on this. And then also people will go out and buy NFTs. And this is why I also decided Pingo. So this is now I would say, the most popular NFT, most popular in the industry. If you have been watching on X, you see that loads of famous people are actually changing their profile pictures to these penguins, and you can also buy it in Walmart. We have talked about that already. So the timing is difficult in short time. So you need to really understand, and you should be careful not to get shaken out. It's very hard to set a stop loss. How do you set a stop loss if it's so volatile, right? Of course, you can set a stop loss, but then you have to decide. If the stop loss gets hit, what you gonna do? You're gonna wait a little more. You need rules. So, for example, you could wait some more percentages that the price will go down, and then you buy in again. But this is more easy to talk about than to do, because it's also very likely that then you won't get in at the right time anymore, and you basically miss the trade. So the timing is very complicated. So yeah, this was my video today. If you want to know when the market is most likely to peak, so when we will see the end of the bull market, like always, go to Market Peak AI and check out our tool. I haven't checked it this morning, but I guess it is around the 2nd of December, and the prices went a little down, maybe, so we are at 53 or 54 risk score. So still, I guess just one indicator was triggered, and this is the altcoin season index. So let's see what's gonna happen. I see you in my next video. Take care and all the best. Bye bye.